Hi, this is Kausar with Remax Real Estate.
Hi, this is Steve Steltzman with the Mortgage Company.
So, if you're currently on my mailing list, you've received an email talking about what the real estate services look like in this new pandemic and stay-at-home order. But I did want to today focus on what that means in terms of the mortgage industry. And this is where Steve comes in. And Steve, if you could give us an overview of what is going on with the mortgages right now.
Sure. So thank you for inviting me. There's been a few changes in the industry. As you know, we're on a kind of a stay-at-home mandate. So that does affect the mortgage industry in the sense that there are some vendors, appraisers and title companies and home inspectors that are not allowed to meet people face to face. Although the mortgage industry and lending is an essential business, we need our partners to kind of fulfill a mortgage application from beginning to end. So we are fully functioning and can lend. However, we have had a couple challenges with how do appraisers appraise houses and how do title companies do closings. So that's kind of what we've worked through in the last 3 weeks and have some solutions to that. So people can continue to buy homes or refinance homes. However, you may not be able to go and walk through a home until realtors are allowed to do that with you.
I can imagine that would pose a particular difficulty to unique properties in terms of appraisals and getting the right value for it.
We're too early to tell whether it's a good thing or a bad thing. The good thing is that we can move forward and continue to do mortgage financing, but will an appraiser still, will you still get the same value because he's not walking through it? I mean, the advantage of an appraiser walking through it is that he could give you credits for things that he's seeing that's, you're not going to see by driving by the property.
In terms of the mortgage industry right now, can you give us an overview of what's going on? Are the rates still up high? Did they come back down? Are they still all over the place?
It has stabilized a little bit in the last 10 days. So the government had stepped in and acted as investors and bought up some of these securities or these mortgages, which stabilized the rate. So right now for a fixed rate interest rate, we're somewhere in the 3% to 3.25% range, which is probably the best in history. There was points there where we were increasing and decreasing a point or a half a point a day, because the market did not know what to do with where interest rates were going. But it appears that we're at an all-time low, around 3 to 3.25%, and we should stay there, barring no future bad news in the economy.
And so would you say this is still a good time to refinance?
I think it's a great time to refinance. I think there are some people that are holding out and waiting for maybe rates to go into the high twos. I don't think we're going to see that. Now, this is just a personal opinion, but I don't think we're going to see that because once again, we've got investors who buy these loans, and the investors want the best return for their dollar, for their investment dollars. So buying mortgage-backed securities under 3% with the risk that the borrower may have a forgiveness or a forbearance for a year is not attractive to an investor. So I think we're going to have to keep the rates somewhere in the threes to get these investors to continue buying mortgage-backed securities, funding lenders that will allow us to fund mortgage loans.
You spoke about forbearance. Can I ask you to clarify? What's forbearance? Does that mean the same thing as forgiveness? What does that mean, and does it affect your credit score?
Forgiveness and forbearance, two completely different things. So the government has allowed and encouraged anybody that needs to, who has been laid off as a result of the COVID virus, to call their lenders and take a forbearance, which basically means a timeout of mortgage payments. Now, they weren't very clear as to how this exactly was going to happen. They're letting every lender decide exactly what the circumstances are. But generally, they're saying you can take 3 months off of a mortgage payment, or you could take 6 months off. There is some talk, I haven't seen it yet, but that even allowing borrowers to take a whole full year off their mortgage payments. Now, that sounds great, but before you rush out and sign up for that, there's a couple caveats I think everybody needs to know. So, if your lender allowed you to take 3 months, most lenders are requiring that at the end of that 3 month period, you have to pay it all back. So if your mortgage payment's $1,200 a month and you take 3 months off, when you end that 3 month period, you're paying back $3,600 one lump sum. So I personally, I'm not sure how that really helps. They are not at this point putting that money like on the end of the loan. So you just take 3 months off and then go back to your payment to payment. Now, they have said that there will be this will not affect, if you choose any of these options, the forbearance, this will not affect your credit score. Uh, I'm a little uncertain because the credit scoring models basically are keyed up to know when you're making a payment and when you're not. So there'd have to be a whole shift in the credit scoring for that not to happen. I'm not saying it's going to affect your credit, but I'd be a little weary about it. It's not as good as the media and the papers are portraying that forbearance to be. You're definitely paying it back more than likely in one lump sum, and it could have some adverse effects on your credit score.
So maybe it helps people in the short term until people have something to get back
Short
on.
term, and I think you want to be have the lender that you're talking to, have them very clearly outline what happens, what's the how are you going to pay this back, when and how, and if it affects your credit.
In terms of a new buyer, we do still have interest. We have buyers that are still interested in purchasing, sometimes sight unseen, sometimes with the virtual tours, and then wait until the mandates restrictions have been lifted. But going forth with a new purchase, what are the new restrictions that we hear about in terms of securing a mortgage?
So let's break that up into two categories. One, you're looking for a home and haven't found it yet, or two, you're under contract for a home and you are getting prepared to go to closing. You're in the processing stage. Your mortgage is being processed to finally go to closing. So if you're not under agreement, you're still out looking for homes or on the website looking for homes, probably great to just retouch your lender. If you've been pre-qualified already, retouch your lender. Make sure that all the guidelines that they pre-qualified you for prior to COVID still apply and you still qualify. If you haven't been pre-qualified, it's probably a good time to get pre-qualified now, because there's a lot of programs. In our industry, we probably had 28 program changes in the last 2 weeks. Right? Things like maybe more conservative credit scores. We used to be able to go to 580 on an FHA financing, and now we're limited to 640. Your income still needs to be verified. So even if you were furloughed and you were promised to go back when the mandates are lifted, if you're not back, that could be an issue. There's some guidelines on program changes or program eliminations. If you were in the jumbo market, a jumbo is a loan above 500,000. That is pretty much temporarily dried up. There's no programs available. Now there are programs that replace that, but if you were pre-qualified in the jumbo world for jumbo financing, that's gone. Now, if you're in the pipeline, same thing. Contact your lender, and the most important thing is stay in contact and let them know where you're at with your employment status. All lenders are required by Fannie Mae, FHA, all the government agencies that kind of make the rules for our business. They're all required, but they're all making us as a lender call 3 days prior to the closing and ask your employer if you're still in the job. That employer comes back and says, no, they've been furloughed. That puts us a hard stop on the closing, and we have to wait until you are back on the job to move forward and close the loan. So you want to make arrangements or work with your lender to see how you can not find out 3 days prior to the closing that you can't get a loan.
If somebody's changed their employment status, if they've been furloughed, can they still secure their mortgage in terms of a new buyer or even the current ones that are processing a loan?
Yeah, so that's one problem we have not been able to overcome. And I think the industry is kind of having some flashbacks to 2007 and 2008 when we had all the foreclosures. And the primary reason for those foreclosures was that the income wasn't verified or there just wasn't enough income to justify the mortgage payment. So the industry is now saying, look, we don't want to go backwards to that. We don't want people in foreclosure. And there's no guarantee that the people that were furloughed will go back to work, right? Or if they, is it a kind of a modified work? So we're required as an industry now to wait for the closing to happen until that person, that borrower, it goes back to work. If they're on a furlough, they have to be back on their job. Now obviously that only applies if the borrower's income was used to qualify you for that loan. If it's a husband and wife and the husband's income was not used and only the wife's income was used, that's fine, but we haven't been able to get a furloughed employee to the closing table.
So this is still a good time to go out and get a pre-approval or pre-qualification from a lender.
More than ever, it's more important to talk to a lender about, the pre-qualification, pre-qualifying under the current conditions. Now, that all said, if eventually, everybody's back at work, things go back to normal, all these temporary conservative guidelines will change and we'll go back to normal, the regular guidelines. But if you're planning on closing, probably between now and September, these guidelines could affect you.
Thank you for that. So basically, to recap, if you have a mortgage that needs to be paid and you can make the payment, you should do so. And if not, get in touch with your lender. If you are thinking about moving and buying a property, now is a good time as ever to go through the pre-qualification process. And if you're under contract and are not sure what your closing will look like, reach out to your lender, reach out to the title and your realtor and see if there are going to be any hiccups or what you should do about it. Thank you very much, Steve, for your time and answering our questions. I'd like to end by thanking all our healthcare workers and give a huge shout out to all those on the front lines allowing us to be able to safely and effectively have access to our essential needs. I look forward to serving you very soon.
Same thing. Thank you very much.